What's up, home buyers? Let's get into how to calculate your real monthly payment. The reason this is going to be so important is because there are 5 different factors that go into your monthly payment, and most people will only share with you principal and interest. The good ones will share taxes, but again, that's going to leave 2 other factors that are not accounted for in creating your actual real monthly payment. And if you're anything like the most of us, we're going to hop on Zillow, check out that estimated monthly payment, take that for granted, and take that to the bank. The reason that is so detrimental is because we find that those are vastly inaccurate, thousands of dollars over the course of the year. And if we don't account and prepare properly for those things, it's going to leave us in a very bad place when anything negative does come up or if there's a repair that we need to make in the home. So I'm going to explain step by step what apps to use, how to go through this calculation, what factors go into that calculation, and how that you can find this on your specific property. But before we get into that, my name is Austin Mitchell. I'm the creator of the Home Buyers Bootcamp. I created that course to educate and inform buyers and prepare buyers on their first purchase from everything from credit score to closing. It is absolutely free. It is instant access. And if you are interested in checking out that course and learning different parts of the home buying process, the link is in the description. You can enroll instantly. But back to the case at hand of getting our most accurate, I think the easiest way to understand or go through this is to do an actual example. So I've started a screen record, which I'll pop up right here, and we can walk through this step by step. So the first thing we're going to need is a loan calculator. This is the one I recommend. I'll put the link in the description as well as the Zillow app, okay? So there are a couple things that we need to understand. The 5 factors that we need to know for this calculation are going to be principal, interest, taxes, insurance, and then the one that nobody talks about is reserves, okay? Being a home buyer has a ton of benefits. I still think it's the best thing that you can do to become financially free, but the negatives are you're not like a renter and you can't just call the landowner or the landlord because you're going to be the one that needs to put in those repairs. So understanding the reality of the situation, you need to have money set aside. That way we don't go into debt or have to pull out a credit card. We can be much more prepared going into this before we get locked into a long-term mortgage. That way we know what we need to set aside. So principal and interest, those are going to go together. To get those 2 numbers, we're going to need a couple things. First is going to be purchase price. So in the Hamptons Road area, the average purchase price is $293,000. Simple math, we're going to round up to $300,000 for this example for our purchase price, okay? Being in this area, one of the most common loan types is going to be VA, which is 0% down. There are a couple other loan programs, which is going to be 3.5%. Or conventional, which is going to be 5%. So to go through a more complicated example, that way we can really understand how this math works, we're going to use a conventional loan, which is 5% down. So 5% of $300,000 is going to be $15,000. We're going to subtract that from the purchase price because that's the money we're going to need to come up with out of pocket, meaning our loan amount is going to be $285,000 total, okay? That is what we're going to use for our calculation, not the purchase price of the property. Now we're going to pull up our loan calculator. I've already entered this in. $285,000 is our loan amount. 6.25% is going to be our interest rate, which is pretty accurate right now for conventional loans, April 2023. Do know that these change daily, weekly, and no loan officer is going to be willing to bet that they'll be able to lock or estimate what it's going to be in a month or even a couple weeks. So if you want a much more accurate and up-to-date number on what this interest rate would be, I've set a link in the description. You can set up a one-on-one call and we can discuss what those interest rates are right now to make this number as accurate as possible. But for right now, 6.25 is on the money. We're going to do a 30-year term. $1,755 is going to be interest and principal. Okay, so that's how much money is going towards our loan amount plus the interest that it's going to cost, that is costing us to carry that or to get that loan. Taxes, this is where Zillow comes in handy. So Zillow is pretty good about this. We'll scroll on down. It'll actually have what our previous year's tax was. So $23.72. What we're going to need to do is divide that by 12, $23.72. There's 12 months in the year, so 198. Let's use 200 to make round numbers. $200 for taxes. Okay, insurance. So this varies, but on average, it's about $100 to $150 per month. Okay. If you have a far more expensive $500,000-$600,000 house, this will probably go up. If you have $100,000 to $200,000 property, it might go down a little bit. But in general, $100 to $150 is a very good estimate on what you can expect to pay for your home insurance. So for this, let's use $150 just to veer on the side of caution. And then the most important part is going to be our reserves. Okay, reserves I think are vastly underrated when you can actually do something about it. So when you can build this into your actual calculation, instead of most of the time we'll go out, we'll see principal and interest. We're like, all right, that checks out. I can afford that. We'll go buy a property. And then we realize there's taxes, there's homeowners insurance. And then guess what? We've got repairs that are on that property that we did not account for. So to be super safe, about 1% of the purchase price is a very good start on having a separate account set up with 1% of the purchase price in there that we're going to work towards. So 1% of 300,000 is $3,000. Divide that by 12, that's going to be $250 per month. And the way that I would recommend doing this money is going to be set aside for anything that comes up, maybe a leaky roof or a leaky pipe, or we need to do a separate pest treatment outside, or the HVAC needs a maintaining, or the water heater goes out, whatever it may be. These are going to be repairs to the property. This does not include upgrades or renovations. It's strictly just to fix anything that deteriorates naturally in a home. $250 a month up until we get about $3,000. Once you get to $3,000, you can ease back a bit. You don't have to set aside so much money towards that account. But I'm telling you, you will not regret having that $3,000 aside, as opposed to having to pull out a credit card and put it all on debt, which would then accrue interest as well. So all in, this is going to be $2,355. Let me triple check that. We got 400, 600. Yeah, so $2,355 all in on a $300,000 property with a 6.25% conventional loan. Now check this out. Zillow is going to have, let's check out where, if we had just done the tried and true Zillow, then we would have gone there and seen that estimated monthly payment is $1,860. So $1,860. So that's $500 off per month over the course of the year. That's $6,000 that we did not account for. And that's, to me, pretty significant. And I would want to have that ironed out well before I went into the home buying process. And so I hope this helps as far as the different factors on what goes into your monthly payment and how to actually find those exact numbers. If you have any questions, I'll leave a link in the description where you can set up a call for me. Again, if you want to sign up for that Home Buyers Bootcamp, it's absolutely free course from credit score to closing. That link is also in the description if you want to enroll. Otherwise, I'll see you in the next video. Bye.